Good morning and welcome back to Almus Market Mornings. It seems the risk appetite is once again building up as the US benchmark indices like S&P and Nasdaq hit marginal new highs. This was post the solid retail sales data released from the US yesterday, which beat estimates. JK, good morning. What are you making out of yesterday's data? It seems US may be in a Goldilocks situation. What do you think?
Good morning, Swaraj. Yes, all data this week have had good headlines, particularly the numbers on retail sales and manufacturing, and also the jobs data have been good. No wonder, the dollar also took some help, rallying a bit against most currencies. Going into the details, of course, the retail sales, which dumped 0.6% from minus 0.9% the previous month, had a lot, has to be seen in the light of the fact that the retail sales are calculated on nominal prices and not adjusted for inflation. So we know that inflation is there at 0.3% per month. And so that's something that would, even then accounting for it, I think it's a good jump, particularly on the control group, which goes into the calculation of GDP, that also showed good improvement. Jobless claims were at 13-week low, although there were some special factors of tool shutdown and all that, but still it is a number that gives some comfort because we had seen as high as 250,000 in June. So now again, that's a cause for comfort. Job market not slumping as much as it was expected to. Manufacturing has shown a very good improvement, showing some sort of a stability after facing several challenges, particularly the tariff related challenges. We had reported the industrial production higher, in yesterday's update. And yesterday we saw, the Philly Fed survey, which covers important districts, of the US, showed the manufacturing actually jumping by 20 points, well into the positive territory. Components like employment index and new orders were also much higher. Prices paid were higher, but only moderately higher. So overall, it's giving a picture that U.S. economy, continues to be muddled with the slowdown, but not as severe as analysts have been expecting, not at least so far. And we have to, of course, wait and see the full impact of tariff-related price pressures in the coming months. We know that August 1st is the deadline, which will not only show up on the inflation number, but will also have its effect on consumption, manufacturing, and employment. Based on the current slow rise in price pressures, though they have not been jumping, market is less confident about a rate cut in September. That's another factor for the dollar. So, overall markets, as you mentioned, the risk sentiment has been quite a bit, particularly the Nasdaq and S&P finding new highs now every other day. Dow Jones is close to its all-time highs also. Even the bond market has not seen the big sell-off that people have expected. Although the 30-year yield, which has been the most watched number because it is at a crucial level of 5%, has closed above 5% for 3 days. Now, on the underlying situation in the US is the higher deficit. If without good attempt to contain the deficit, I think yields will be under pressure, even as U.S. Treasury tries to borrow more and more to meet their, increasing debt also. So that's the reason why, the government is, continuing to pressurize the Fed for cutting rates, but Fed is objectively taking a view of wait and watch approach, because there can still be some more price pressures, at least once till the August 1st deadline is met and we know the final picture on what trades. Comfortingly, yesterday there was a statement from the US government saying that about 150 countries will have tariffs around 15%. And now again, that probably can be seen as a positive sign. Now with the import prices indicating expecting that the exporters to the US are also absorbing some of the prices, tariffs at their end, and lowering their prices for the US importers is a good news. So I think we are on a watch on inflation, and based on that, consumption and manufacturing. So the dollar has definitely seen good correction in the recent past. For instance, Euro dollar had traded a high of 1.1850 and has seen 1.1570 a couple of times in the recent past. Of course, finding some technical support there. In other words, dollar index is also finding some resistance above 99. Not expecting, because it is a corrective move that we are expecting. It's not going to be a straight line move. It needs some good triggers, more positive news from US on the basis of inflation or consumption can lead to more correction. I expect euro to trade at 1.15 before it finds fresh buying in a big way, and similarly on the GBP at 1.33, and perhaps the yen at 150 as well, as even as they go into a weekend election for their upper house of their parliament. And with fiscal spending expected at a higher level, Japanese yen could be under some more pressure. Today's data also indicated that the inflation number in Japan is lower last month. So there is less pressure on Bank of Japan to hike rates. So that could also see some yen selling, but all eyes on the new government. I mean, it may be not a new government, but the present government with a wider coalition is what is expected. But there can be a weaker coalition. So that is what is keeping the yen on the defensive. Gold continues to be ranging between 3,300 and 3,370. Seems like finding good bias at the lows. At the same time, no much trigger for it to cross the 3,400 mark. Rupee again stuck in the range between 85.70 and 86.10. Flows are dictating. No major view-based buying or selling is seen in the market. Yes, I think we had inflows related to IPOs, and yesterday we also heard about outflows of these excess money subscriptions from the large IPOs. Good news is that the QIP from SBI has received a massive response of 1 trillion rupees. That shows the confidence of the global investors. Meantime, the stock index seems to be correcting as well. So it's a mixed picture, and the rupee is absorbing all this, including the global cues, and also awaiting the US-India trade deal, which should be happening in the coming days. Thank you.
Thank you, JK. And overall, it seems yesterday after the retail sales data, which came in higher, but as JK mentioned, it's very important to know that it is calculated on nominal prices. So it includes the inflation, which is I think month on month around 0.3%. Still a strong number, but of course, this small caveat needs to be kept in mind. So it seems good data from the US. Manufacturing is also seeing some improvement. Yesterday, we had the Philly Fed manufacturing index, which showed improvement in activity. Components like employment and new orders jumped. Jobless claims were at 13-week low. And so basically, the risk sentiment remains quite upbeat. US equities are at highs. Dollar index now, though, is finding some resistance above 99. So it still requires more positive news for a move higher. And when it comes to the rupee, we are stuck in a range between 85.60 and 86.10. And so, yeah, that's it for this week. We'll catch up next week with a fresh round of updates. Thanks for listening.